Tesla continues California domination. Tesla has continued its domination in the California auto market as the state's New Car Dealers Association, CNCDA, has released data from the first quarter of 2025. 2025 is going to be one of the more difficult years to determine the outlook of the automotive sector due to the uncertain impact of tariffs and how much they will hinder overall growth. However, we can break Tesla's situation down a little further and explain why there were some year-over-year declines in registrations in California. As a whole, Tesla registered 42,322 vehicles year-to-date through March. Data from the CNCDA's report shows. This is a 15.1% decrease from the 49,857 cars that had been registered by owners in the same timeframe last year. Tesla still owns 43.9% of the overall zero-emissions vehicles ZEV segment in California, down from 55.5% at this point last year. It is a decrease, but there is more to it. The top 25 BV and FEV models are led by the Model Y and Model 3, which counted 23,314 and 13,992 registrations, respectively. The third-place vehicle is the Honda Prologue with 4,493 registrations. The Tesla Cybertruck landed in 8th place with 2,282 registrations, and the Model X was 13th with 1,800. The same quarter last year saw roughly 10,000 more registrations for the Model Y than this year, as Q1 2024 saw the all-electric crossover accumulate 33,467 registrations. The decrease is due to Tesla's switchover of production lines to the new Model Y build. Tesla said in its quarterly delivery report that it lost several weeks of production due to this changeover. Tesla dominates in California, but EV growth is the true winner. Interestingly, the Model 3 performed better than last year, as it only had 11,162 registrations through the same period in 2024. It had 13,992 registrations in California this year. The question regarding Elon Musk's political involvement and its impact on Tesla's sales figures remains. Without surveying them individually, there is no way of knowing exactly how many people chose to go with another EV maker's vehicle due to the politics. However, the Model 3's slight bump is an encouraging look. It's not all gloom and doom. The CNCDA writes, Tesla's troubles continue to worsen as Californians are giving the cold shoulder to the direct-to-consumer automaker and controversial owner, Elon Musk. Registrations show a massive decline of 15.1% through March versus this time last year. A year and a half of continuous quarterly declines proves this downward trajectory for Tesla is a lasting trend. The company's market share also dropped by 11.6% at the end of Q1, now holding less than half of the California zero-emission vehicle ZEV market for the year. Most importantly, Tesla outpaced every other EV maker's registration figures by a considerable margin. Despite many analysts stating that there is irreparable brand damage, Tesla had 42,322 registrations in California in Q1, significantly more than second-place Ford, which had 5,819 ZV registrations in the Golden State through the first 3 months. Despite what many are stating regarding Tesla's brand damage, the company is still in control of the market substantially. It was always expected that Tesla's market share, which sits at 43.9%, would fall slightly each quarter after more automakers had EVs to offer. However, the company's control still remains, at least for now. Source: reposted and summarized from Joey Klender at teslarati.